What's going on, you guys? My name is Zach Hartley and welcome back to my weekly watch list video. In this one, we're going to start off by reviewing my stock picks from last week. Then we're going to dive into the market conditions. Then we're going to start looking at a couple of stocks for the week ahead. Here's everything you need to know. Let's go. Okay, so last week I talked about 3 stocks. The first one was Google, then Amazon, then Tesla. And Google, I said, hey, I like Google. I think it's undervalued. I think we're coming down to support and I think it's going to do well this week. Turns out it did do well this week. It finished up by 11.5% compared to where it closed the week before. So that was very nice to see. We found support at 83.45, so about $1.50 off of where I was expecting. Still a really good result here. Next one was Amazon. We closed the week at $90.98. I said if it falls any lower, we're going to have major support at $80. If not, $90 should kick in as support. It turns out it was right in the middle there. We actually fell down to $85, but since the last week, we're actually up by 10.7% at the close of this week. So still a good result here. And then Tesla, this one was really interesting. I said, guys, if we fall below $200 here, it's not going to be good for this company. I think there could be a shorting opportunity. Turns out the stock fell all the way down to $177, dropped by about 15% in the week. Has started to recover. We're currently trading at around $195. We had a really strong close to the week last week, and it definitely helped out Tesla for sure. Now, the reason we had a strong close was because of GDP numbers that we're going to talk about in 1 minute. But first, let's just start with our indices here, beginning with the NASDAQ. So the NASDAQ started off with a bit of a choppy week, but on Thursday and Friday, it finished very strong, basically closing above our previous high, which is very nice to see. We also bounced off support at 10,000. So I do expect this to be at least the start of a slow bullish trend right here. The stock chart is looking nice. It just kind of depends on what happens over the next few weeks here. When it comes to the S&P 500, we're seeing an even stronger bounce here, a little bit more of a vertical direction and some even bigger gains. Again, finally eclipsing that previous high that we had right here at kind of the end of October. And when we look at the Dow Jones, it's even better. We're almost approaching our last major high right here in August. We're coming pretty close to it, and it has been a very nice bounce off of this 29,000 area. Now, the one industry that I've pointed out for the last couple of watch lists that is doing well is the energy industry. As you know, almost everything has sold off over the last 6 months, but energy actually just eclipsed a 7-year high with regards to this entire kind of sector. So the Spider Trust energy sector just eclipsed the 7-year high that was set back in June. This is very nice to see, and there's a lot of energy companies that are doing extremely well right now. So it is not all doom and gloom in this marketplace. There's still a lot of opportunities, but one of the places where there's not a great opportunity right now has been crypto. We had possibly the most tumultuous week in the history of crypto this week, as FTX basically went bankrupt 2 days after telling everybody their money was safe. So really not a good week in the world for crypto, and it's really bad for crypto because if people are worried not about the value of the crypto going up or down, but just their ability to store the crypto on these exchanges, that causes so many trust issues, and it is so bad for the market. I can't emphasize it enough. So very disappointing week for crypto. When it comes to earnings though, we've still got a big week. We got a lot of companies reporting earnings. We've got Home Depot, Walmart, we've got Nvidia, we've got Alibaba, we got JD.com, Foot Locker, Dole. We've got a lot of companies reporting earnings this week. So still lots of different catalysts, lots of different opportunities out in the marketplace. Now, let's just talk about inflation real quick. In the last few weeks, we had a very positive GDP number. That was really nice, and that was sort of the first catalyst. And then just recently, we had new inflation numbers come in at 7.7%, which is a very clear decline from the 9.1% where we were at in the middle of the summer. So now that inflation is starting to come down, it also means that the Fed might be able to ease off the pedal with regards to these rate increases, and that would make the entire economy give a little bit of an uplift. It would mean that there's less pressure to borrow money, there's less pressure when you have a mortgage, there's less pressure basically all around, and it allows better growth, which means stock prices are likely to go up. And so this is a very good number. This is exactly what we want to see, and it also means that the strategy from the Fed of increasing interest rates is really working. Like this, that's what this chart shows, is that as interest rates are going up, inflation is going down. That is what they wanted to see, and this is definitely a good sign. And this is the main reason that we saw a pop in the market on Thursday and Friday. It's because basically what the Fed is doing is working. Now, when it comes to stocks this week, one that I have my eye on very, very closely, and I think I pointed this out a little while ago, is ASML. ASML has been trending in a very bearish pattern recently, down by over like 50%, pretty crazy here. But recently they have broken out of that pattern. They have broken out of our resistance line right here, and they are doing extremely well. I like ASML. They are the manufacturer of the machine that makes chips for everything that we use. They're the only company in the world. They have a huge strategic advantage, and I personally think the company is oversold right now. They have good volume, they're breaking out of resistance, and the MACD is showing positive signs. I like ASML this week, and I'm going to be watching it closely. Next one here is Adobe. Adobe is also breaking out of resistance. You can see we gapped down right here after Adobe announced their recent acquisition. The market did not like it. We found support 3 times right here at 275 though, and now we have established a basically resistance level at 330, and now we're breaking out of it. So very, very nice chart here from Adobe. If this continues, I am a buyer of Adobe stock. Next one here is in the online learning space. This company is Udemy. As you can see, we have basically quadruple topped right here at $16. We also have a triple bottom right here at $9. So the stock is trading within a channel, and I'm looking for the breakout of $16. I really, really like this company. I think they do a great business, and they're really, really helpful for a lot of people. If you don't know what Udemy is, it's an online course platform. They do a really good job, and the stock, the company is growing and the stock has only gone down. Now we're consolidating. I think this is a good sign. If we see a breakout of 16, I think that is confirmation of a new bullish trend. Now, if you're interested in checking out any of the charts or seeing where I pull these charts from, or using a new day trading or swing trading brokerage, I personally use Questrade. That is the platform that I recommend. If you use the link in the description down below, you get $50 in free commissions. To try it out completely risk-free, I personally recommend it, and I got a bunch of video tutorials on my channel if you want to learn how to get started. Now, last company here in the watch list is Coursera. This is a company that has kind of let me down since their IPO. I like the company, I like what they do, and I think they're going to grow over the long term. But again, the stock price has only gone in the downwards trajectory. As of recently, I think $14 is a very key level here. You can see we bounced off $14 several times. Then we got rejected at $14. We came all the way down to $9.81. Now we are back up to $14. If we can break through 14, I think that's a very bullish sign. I'm going to be watching Coursera very closely. Both Coursera and Udemy are in that kind of online course space. And because internet is becoming more and more easily accessible, and online learning is becoming more and more prolific and easier for people to get into, both of these platforms teach regular people employable skills to help them get paid more. And I just think it's an incredible mission. It's a great market. It's only going to grow. And as internet becomes more accessible to people all over the world, the market for these services is going to dramatically increase. So I want to be in on the ground level. I just want to get in at a good price. So I'm watching Coursera and Udemy very closely. Now, that is it for this video. If you got any value out of this video, please consider liking and subscribing to this video. I sincerely appreciate it. There's no sales pitch. I don't want to talk about my course. If you're interested in any of that, link is down below. But thank you so much for watching. I sincerely appreciate it, and we will see you in the next one. Good luck trading, good luck investing, and we'll talk to you soon.